from the Mike Rosehart Show. We're live again for another Wednesday, and today I am feeling confused. We live in strange times. In so many ways, things never go as you expect them to go. And that's why it's so important that you diversify in everything that you do. Shit goes ways you don't expect it to. As an example, the US economy, inflation, we had our first good reading for inflation. Core inflation is like in the 3 handle, which is like only 50% above where they said it would be at this time. They said it would be at the 2, in the low 2s by now, but they were wrong. It's interesting because the Fed stopped giving good, accurate forecasts for all of 2025 and 2026. I think they have no idea how things are going to go. In fact, it was interesting to hear Jerome speak today. And the NASDAQ hit another all-time, it's rallied all-time high, all-time high, all-time high for 3 weeks in a row now, basically. I think it hit 477 on the QQQ, which is like almost 20,000 on the NASDAQ. Weird times. I mean, who would have thought that in 2022, fall 2022, like not even a year and a half ago, if you just bought the NASDAQ, you'd double your money. Or buy like any tech stock like Meta, or you get like 500% return. That's fucked. That the largest companies in the world right now, if you take the 3 largest companies in the world right now, they're all tech. The 3 largest companies are NVIDIA, Microsoft, and Apple. Like Apple actually overtook now. If you average them, they're trading at a 50 times PE ratio. So 50 years of current, they're extremely profitable, their best years they've ever had, 50 years to break even as an investor. Who wants to invest in a 2% yield? I don't know. It's just crazy to me that the world, like Meta in 2022 was at a 9 PE ratio, a 9 PE ratio. Just crazy to me that, 50 price to earnings ratio. I mean, companies are trading at 50 times what they make in a year. That's an insane ratio. That's 500% increase in the way that they value these companies. Weird world. It feels a lot like the NASDAQ feels like Toronto in 2022 when things were selling at a 2 cap. We had properties that would sell. People would buy at a 2% rate of return. They're like, I'm so happy the cash flow is 2%. They're going to borrow against the property at like now 7%. And these properties they bought that return 2% return on asset. And the stock market feels the same way right now. Specifically, and it's mostly concentrated actually in the top biggest companies in the world. The small caps actually really aren't that overvalued in comparison. I think they're overvalued, but in comparison to your NVIDIA's at 70 PE ratio, your Apple's at almost 40, your Microsoft's almost at 40. A lot of these tech companies are mammoths. They're not, like, I don't know how long this growth is sustainable for, but even if they reach those crazy growth targets, 40 to 50 PE ratio, like I normally would pay like a 7 PE ratio for a stable company, and like you pay double that for growth companies. So like if it was like 7 or 8 for a stable company, you'd pay like 15 for a growth company. Like you pay twice as much per dollar of earnings because you knew that their growth is going to be substantial, and so you get your money back. But like 50 for a stabilized, one of the largest companies in the world, like if you look at the top 20 companies, they have almost all of the growth in the NASDAQ concentrated at the top. It's the weird simulation we live in, guys. That just Mandela effect in full force. Like I can't believe how many things are different than I thought that they were. This simulation, you know what? I'd like to be in a new simulation because I've been short the NASDAQ in my stock portfolio. It's now become the point where my options portfolio is like 5% of my net worth. So it's actually like, even though it goes to 0 now, it doesn't even matter that much, but I'm still so emotionally invested in seeing the world correct to reality. Just crazy times that we live in right now. Yeah, I don't know what else to say other than like, I'm just bewildered. I'm lost. I'm confused at the exuberance and the excitement and the YOLOing of this degenerate society of printed money where no one cares. Like it's all just institutional capital rushing in to chase the high and create new highs. I see a lot of downside risk, but man, do not pick individual stocks. The lesson here, guys, is you can't pick which companies will do 500% and which won't, right? all you can do is buy a little piece of the entire market and hope for the best. So that's all I got to say about that is, it's tough times, guys, out there. And for those people who are suffering, um, everything that I've been investing in lately has just been hard. Like every sector, I invested in crypto mining, like obsolete. All those machines are worthless. Invested in again, I invested in real estate just in the shitter in Ontario, like just the worst market I've been in my entire career. The last 14 years, this is the worst that I've seen things. Still buying. We're still acquiring properties. We just picked up a nice property. Yeah, it's still buying, still acquiring assets. We're still building the business, still focusing on that. And it's going well, as well as it can be in a flat or a declining market. The cut to interest rates last week was good. I think the US didn't. If anyone didn't watch the news today, Jerome Powell spoke. He was very neutral in how he spoke. My favorite highlights of today's FOMC meeting were, so the summary was the US did not lower rates. They are staying higher for longer. By the way, in 2021, if you had said to the Fed that rates would still be mid 2024, would be at the level that they are now and still holding, even 2023, I think almost no one would have agreed with you. Like the market priced in guaranteed cuts in 2023. And then when that didn't happen and they were wrong, the market still went up. There was never a correction. It's like when analysts are wrong, the bullish analysts, when they're wrong, it just goes up. When they're right, it goes up. So no matter what, it goes up. It's detached from any reality, at this point to me. I think it feels a lot like the dot-com bubble in that, and I didn't trade in the dot-com bubble, but from what I hear in accounts that I've talked to people who were through that period, they said there was just so much belief that the world would change from the invention of the internet and the computer that they literally thought by 2008 that these companies would be at 100 times earnings, and it never came. And they said, oh, there's no competitor for this company, and there'll be a bunch of competitors that pop up. Reminds me a lot of the hype right now. And just wild to me, this world that we live in. Every facet, like real estate has been crushed, and I have a lending business too instead of real estate, and that's been like a series of defaults. I'm now in the process of taking properties, and it's a shitty situation. I guess when you think about it, real estate's actually lagging really hard to inflation. The stock market, going up 100% would make sense. If you believed the dollar was trash and that the value of the dollar was nothing, you would deploy it, frivolously and get rid of it as fast as you can and deploy it into risky things that would hopefully get multiple bag returns. So I guess it's logical that people, funnel their money into Nvidia and in GameStop and in, overhyped, overbought companies in the chase of some crazy return, because again, they can't even afford to pay for milk, which is up 40%, or eggs, or, meat, like food you need to live, or your rent that's up 30% in the last 4 years. We've had insane inflation. What's interesting is since 2022, if you just look from 2022, and I guess we're cherry picking the data here, but 2022 to now, rents have gone up, house prices have gone way down in Ontario here, like a third of their value in some cases. In some tertiary markets, lost a third of their value, gone. So if you put 20% down the property, you're currently negative 18% equity. Meaning if you try to sell it today, you have to almost, with closing costs and realtor costs, put another 20% down just to get rid of the property. So if you bought it in 2022 at the peak in the spring, you put 20% down, your 20% is gone. And now you have to put another 20% down. So on a $500,000 house, it was $100,000 down. Now you got to put another $100,000 in just to get rid of the property, to pay off all the debts on it. That's the reality of the current market. But over that same period from 2022 to now, we've had 20% inflation. So not only that, but your house that was 500 is now probably 400 or 390, that same property, right? So millions, now 800 something. On top of that, your dollar is worth shit. It used to be able to buy you a lot more groceries, a lot more stuff than it does now. And so it's just a weird situation, but just as the nature of whenever you have a great hiking cycle, it just fucks the shit out of commercial and residential real estate. And I thought it would have more of an impact on the stock market, and it just didn't. These tech companies have huge cash reserves. They're able to raise capital easily. I thought it'd be difficult. I thought against the treasury bill paying 5 or 6%, it'd be hard for some of these trash companies like like Sonder or the Airbnb re-rental company, one of the largest in the world. I think they have like 90,000 units that they rented out and re-rented out. By the way, almost all the re-rental guys and girls, a lot of them lose money, right? So it's, if the big guys can't do it at scale, 88,000 units with all the economies of scale, in every country in the world, they have units that they re-rent. I mean, what makes you think you could do it on the small scale, right? What advantage do you have? Unless you value your time at nothing, in which case, then you're getting a salary, basically, to be an Airbnb re-rental arbitrage specialist. Anyway, I digress. Companies like that just secure like $10 million in financing as they're about to go into bankruptcy, burning $50 million a year in negative cash flow. They raise their entire market cap in debt. And it's crazy. Like, I didn't think it would be that easy for people to raise capital when there are so many opportunities out there in the debt market that pay a 10% yield. So there's just way more money in the system than I thought that there was. I guess that's what happens when you print a ton of money. And then on top of that, when you blow up the NASDAQ and the S&P 500, I mean, all that capital just doubled. So there's just so much more capital out there. When you print a whole bunch of money, the people put it into the indexes and then that doubles in value. So now there's just double the money in the concentration of the rich. I got to make that clear. The poor and the middle class are poorer than they've ever been. They're fucked, straight fucked. But the upper class, like the people with all the money, the top 10% that have all the wealth, they're twice as rich as they were pre-pandemic. So it's very it's a confusing, strange world. And that's why I titled today's stream Strange World. Things are just getting to a point where I think society might actually collapse. I think it's actually possible that we have riots in the streets when the 60% of the population can't afford to eat. It's getting bad, the divide between the rich and the poor. And the degenerate behavior of the middle class is clearly showing. Like the fall of Rome, gambling was at an all-time high. People tend, at the collapse of society, there's the most degenerate behaviors, things detach from value and reality. Maybe we get another 50 or 100 years of this, I don't know. You know, it used to be $1, the US dollar would buy a lot. Now US dollar buys nothing. So it's interesting, you know. I'm waiting for a pullback still on those shorts, but I'm buying real estate. I'm buying lots of it because I do think that we may have. It's really possible that we go through a situation where we have a major recession or depression following this. It would need to be a big catalyst like war. Something's going to come. Something's going to break. You know, it's one of those things where. Yeah, I feel like it's tricky, but there's no way to kind of fix this. Like, how do you fix the challenges with the 55% of the population paycheck to paycheck? You have the majority of society who have no savings. They have nothing. It's you know, all we can do is try to live frugally, find ways to sustain ourselves on less, train ourselves for these types of situations, and save, and then try to invest in things that we think will hold value, you know? Because the dollar is going to be worthless, guaranteed. In the next 100 years, the dollar will be effectively worthless. You'll need truckloads of dollar bills to do anything. Maybe they'll start printing $1,000 bills and $10,000 bills, which is what they've done in other hyper inflated societies. But even if we go at a 2.5% inflation rate, which is like target, I guess, we're already, if we had been at 2.5%, we'd already be at 2040 worth of inflation. But we had a huge spike in inflation, right? So we'll never have deflation. We need it. I mean, things need to come down in price, but they won't, because deflation is painful as fuck, and they'll just kick the can down the road. So we will never get deflation. We might get disinflation, a slowing of inflation. I think that's where we're trending. It seems like inflation is actually coming down meaningfully, at the expense, again, of the bottom half who are suffering. And that's how you bring inflation down, right? Is you crush their ability to spend, which is what they're doing, and that's why spending is coming down. Also, geopolitical risks are, I think, at all-time highs. Literally, the U.S. and Russia. Russia is training nuclear subs on the border of Florida right now in Cuba, declaring the U.S. an enemy. I mean, if that isn't a Cold War type tactic, I don't know what is. A weird world we live in. A lot of risk. All it takes is one negative catalyst, and we could see a 20-30% correction, which would just be taking us back to like 6 months ago. That's how crazy the market's been rallying straight up. In 2021, I said the same thing about real estate. I said, this can't sustain. And it did for a lot longer than I thought. We were getting real estate was appreciating 2% a month for like 2 years straight. I was like, you can't have real estate going up a quarter, 25% every year sustainably. It just doesn't make sense. And of course it corrected. But if I had shorted real estate, I would have started shorting real estate probably in 2021. I would have shorted it for like, I guess it took till 2022 May to crash. So I would have shorted it for 16 months before I was right. Because timing shorting is fucking impossible. None of us can predict when things will happen as they will. But yeah, I saw your comment there. I will try to stream it horizontally next time. Sorry, I put it up Instagram style, which is like vertically with my iPhone here. So apologies for that. You can't stream it to your TV. Jordan, how you doing? David, how you doing? Do you invest in index funds? You should. Everyone who's watching this should invest in index funds. You definitely should not be investing in individual stocks. That is not prudent advice. Something like 99.9% of all people that pick stocks lose to the index over a 25-year period. So you might have years where you're up and beating the index, but for the most part, when you compare to the index, you will lose. So just remember that, guys. Mutual funds, like the active fund, hedge fund managers, most of those guys, net of fees, don't outperform the index. And so just keep that in mind when you're investing. Just buy a little piece of everything. You'll be just fine. Jerry, how you doing? Thank you for coming from Instagram. Grander says, hey, my Paul as well. What are your thoughts on Apple stock flying up? I like Apple as a company. I'm in their ecosystem. I understand the value and the lure. I think it's hyped. I think it's overvalued. I think that Apple is an amazing buy at a 20 PE ratio. You know, at 20 times earnings, I love Apple. I think it's sustainable. I believe in the company. I don't know if they'll grow like they say that they might, but I think there's still areas they could grow in emerging markets. They're a great phone provider. They make great computers. They have great service. There's a number of great things I love about Apple, but I don't love it at almost a 40 PE ratio. I don't want to pay 40 times current bloated earnings, they have great earnings. They have great margins, but I think that at 40 times, it's a bit rich. So I think it's overvalued. I think that the hype about the AI stuff driving the stock up something like 13 or 14%, just on hype of the partnership on AI, I don't think everyone's just going to go out and get a brand new iPhone immediately. The same people who would have bought an iPhone and renewed probably will renew again. That was already baked into me. Like everyone who's in the iPhone ecosystem, we all get new phones every 2 years. That's already baked in. So it's like, because now you're partnered with OpenAI, am I going to get a new iPhone like that much sooner? Probably not. And the next iPhone that I buy, probably will keep it for a few years as well, especially if there's not any big leap in technology. But I think there's a bit of hype there. But I love Apple as a company. I think they have great cash flow. I like their business model. I think they have a pretty big moat in terms of a loyal customer base that protects their earnings. But again, like just not at these valuations. You know, it's like someone asked me, like, do you like this property? And it's like, well, I love the property, but I don't love the price. So that's kind of how I feel about Apple. But again, don't buy individual stocks. Buy the entire market. If you buy the NASDAQ, I think like almost 10% of the entire NASDAQ is Apple. If you add up like Microsoft, NVIDIA, Apple, and like, I don't know, who are the other big names? Like Tesla, Magnificent Seven. They're like a large, not a majority, but a large percentage of the NASDAQ. So you get exposure to all of those names just by buying the NASDAQ, which I would not buy at all-time highs after hours today with Broadcom's earnings. They are up like 13%, I think Broadcom's up, which like, again, the AI hype, right? They're selling network devices to these AI data centers that they're building. And I think that, again, that might be a bunch, like people are paying any amount of money to get caught up on AI and to get their facilities set up. But I think that kind of dies down at some point and competitors come in and sort of squeeze the margins. That's usually how capitalism works. There will be other entrants who will come in and compete in the space and offer maybe a better product. So I think there's a lot of risk in buying at these prices. Love NVIDIA as a company, but I would never pay even half of what the company is currently trading at. I mean, if it dropped 50% right now, I would be buying them a ton. If we went through a recession right now, I would load up on these names. But again, I think that it's prudent to hedge your portfolio at these levels. It's one of the few times I think you'd be all right buying hedges. Stay long, but buy hedges to protect. Don't do as I do as I say. Because I am a degenerate when it comes to my options portfolio. I wish that I could listen to my own advice. If I were to review my own portfolio 2 years ago, a year ago, now even, with like my financial advisor hat on, I'd be like, what are you doing, Mike Rosehart? Like, look at your stock portfolio. Stop trading stocks. Go invest in your real estate business. Like, what are you doing? Maybe buy a little bit of index stuff. Don't look at it. Don't waste your time on it. Your time's $1,000 an hour. What are you doing? And yet, the gambler in me, I come from a line of gamblers, unfortunately, the gambler blood, can't not, I think I'm hooked on the excitement of trading or something. I don't know. More, I think it's the ego, right? It's just like not wanting to capitulate at the bottom. That's a shit feeling. I want to capitulate off a bounce in my net portfolio value. How would you trade an option with the SPY? Well, in general, it's been back tested. For the most part, when you trade indexes, you typically don't outperform the index. What you can do is on a really big down day, you could sell put options, get assigned at a discount, like 2% off, and collect the index and then sell some covered calls on it. That's called wheeling, option wheeling. And you basically just collect a little bit of extra dividends, have some insurance on your portfolio by selling covered calls. So if it does go down, you make some money on the down because the covered calls go up in value. If it goes way up, eventually your share gets sold away. You can just buy back in again if you want. So that's an option for people who want to do that with options trading. That's how I got started in options trading, and it became into degenerate behavior, running the wheel in reverse, shorting, where I would sell calls, get assigned, and then sell puts until they got closed, but it never closed because the market turned into a raging bull market. And I didn't factor that tail risk. I just didn't think it was possible that the NASDAQ would win every day, every week, every month for like 80 weeks straight. I was like, holy shit, I don't believe that this can happen in this environment with a 7% interest rate while real estate's collapsing and the banks were collapsing last year. I couldn't believe it. The kind of massive bull run that we had, despite the geopolitical risks of war, all the other issues going on, it surprised me. And that's usually the best kind of bull run, the best kind of recession too. Like everyone's bullish now. So as soon as all the bears are gone and everyone said, hey, all the bears are all wrong, that's when it will crash. When no one expects the crash and no one's hedging for it, that's when it happens. It's typically, data says that it's when no one expects things that's when they happen. You're not telling me something that I don't already know when you talk about the saying that the market will remain irrational longer than I can remain solvent. That's very true, actually, of shorting. And shorting over long periods of time, you will always lose. So don't short for long periods of time. Short for small periods of time and then cut. Go back to being long. I'm not going to long at these levels. I'd rather buy real estate that's depressed in price right now and prepare for the upswing as rates come down. Where would you buy in Florida for Airbnb? There's so many places you could run an Airbnb. Like, if your goal is just gross revenue on Airbnb, like if your goal is to find a property that rents for $500 a night, you'd have to spend a lot of money for that said house. You might pay $1 million for a house that will bring in $500 a night on Airbnb. But there might be a place you can find an Airbnb that does $99 a night, but the house is like 90 grand. In which case the ROI net based on per dollar you invest is much better on the shitty little house that's 100 grand. So there is no one set answer that's right. There are some places you can invest in Airbnb, invest with Airbnb properties that will have more drama too, right? So it's like, is your goal ROI or is your goal minimizing drama? Because the Airbnbs that are in like Daytona Beach, you might get bums in there that are on drugs and you'll have problems and they might, have damages and issues and headaches. Whereas the Airbnb guests that check in Naples, a really well-to-do area of Naples, Florida, they're probably not going to trash your place because it's a different demographic of person that you're attracting. And because you're getting that really nice quality guest in Naples, you probably won't get as good of ROI on the purchase price of the property. So typically, the less headaches, the more safe the investment, the more passive the investment, the shittier the return. The more problems, the more headaches, the more damage, the more drama, the better the return has to be for the investor to take that shit on. What you don't want to do is get the mediocre return and the maximum drama. So be careful of who your target market is of your customer that you're selling to through Airbnb and just in general when you're renting out properties. Randy says, do you consider properties in a low or no appreciation market with no cash flow? What is the exit strategy with these? Do you just hold these until there's an equity to refinance? Typically, I don't look for like those gem properties. I know a lot of really rich people who do, and that's interesting. I don't understand the appeal in the same way that they do. I know people who park money in really nice properties in like Vancouver. And their logic is like, yeah, I'm a 1 cap or a 2 cap rate and I make no cash flow. But it's a place that I just want to own. I'm going to hold it for a long time. I don't care. My parents live there or I grew up there or, I just love Toronto and like someday I might want to move back there. And so they have these properties that they hold for emotional reasons for the most part. And they try to justify it by like saying, oh, appreciation is going to be greater in the larger markets. It actually isn't necessarily data tested. The larger markets don't necessarily appreciate faster than the small markets. I've seen some smaller tertiary markets that appreciate at a percentage rate faster than the bigger markets. So it's like, if you don't get better appreciation and your cash flow is worse, why would you invest there? Well, then there's the argument of like those A-class properties have A-class tenants. And so it's like a tenant that never bothers you, that always pays on time, that's super rich and like well-to-do and no problems and drama. It's like, okay, that argument actually holds water. That makes sense to me. And so they just accept a really low return of like 3% a year on their real estate. And they're okay to make 2 or 3% because it's passive and over time will appreciate. And they're not looking to get a great return out of it. They're just looking to get like a decent return, protect their money. It's more about capital preservation. It's more about the emotional feel of that property. I should be more cognizant of, to be fair, like I'm very risk averse. I'm attracted to risk, right? And so I like the big outsized returns, but that sometimes has got me bitten in the ass. I once did a loan at 25% interest and it defaulted and I lost almost all my principal. It was a smaller amount to a contractor, but I learned a lesson of lending at 25% plus a 5% fee. So it was like 30% annualized return. I took a huge risk and I ended up getting interest for like a year and then the person went bust. Is anyone stupid enough to sign that kind of agreement? Typically, not always, but typically paying that kind of rate, they're going to go under because they're either a bad business person or they're close to bankruptcy already. And that's why they're willing to take that kind of debt on, right? So whenever you're chasing outsized returns, you have to be cognizant of managing risk. So I'd much rather make a 20% net yield with a really low risk adjusted return. So like, even if I had 18%, let's say, risk adjusted return, if my risk is really low, but I'm making 18, I'm really happy with that, as opposed to making 10%, but having a ton of risk, or making 50%, but a ton of risk. So it's important to manage risk. And it's funny because like I know this shit and then I go in options trade. And thankfully it's now become such a small percentage of my net worth that like that bucket is contained. I'll never add to that bucket. I'm done. Whatever happens to that options portfolio, if it spikes because we have a recession, awesome. I'll be super happy about it. If it doesn't, I'm okay with it. I can afford to lose that money. But yeah, a shit experience. Going through a massive loss. Like anyone who's lost, if you've ever lost $1 million in a month before, or $2 million over a couple of months before, I have been through that now, and it's like, it's a mind fuck. Like when you lose a couple of $1 million in a short amount of time like that, like I lost $3 million in 6 months once, and it's like, thinking of how many hours I'd have to work to make that back, you get into some depressive, like I'm a type A person who likes to win. I fucking hate losing. I would sacrifice my life energy. I will stay up all night. I will work all night. I will do whatever it takes to not lose. And so when I lose and it's my own fault, there's nothing worse. I'm so mad at myself for the decisions that I made. And all I can do is just own it and be like, I fucked up. Because there's no value in blaming other people, blaming this rogue market. You never saw it coming. You never see any shit coming. That's how it works. It surprises you. That's why risk management is so important. But yeah, no one to blame but myself for my decisions and my actions. And all I think is, it's a couple more years now to be a billionaire. I have to now work a couple extra years to get to my goal of being a billionaire. It sucks. It does. To lose life energy is like going to jail. It's like you're giving up some of your life, some of your freedom. Yep. Any other people going through that with me right now? Jump in the comments. If you're suffering like I am right now, I feel for you guys. Everything is shit in real estate. Rates went from 1 or 2% to 7%. Our mortgage payments doubled. So if our rent stayed the same and our mortgage payments doubled, we lost all of our cash flow. If we were investing in, crypto mining or one of the businesses that got destroyed by this recession, I feel for you guys and I'm here for you guys. Let's strategize on ways we can help you guys get out of this situation. It's not about, not failing. It's about failing and then moving on from it. You can't let the failure stop you from reaching your trajectory. You may now have to accelerate faster to get back into the trend line you were on before in terms of net worth growth, but it can be done. And just don't lose everything. That's the key. Never put it all on the line. Always have multiple buckets. Someone says, because the passive flows from people paychecks that flow into their 401ks and pensions. Yeah, I mean, to an extent, that's true. However, like that, the pension paycheck shit, that doesn't cause the NASDAQ to double in 1 year. That is mostly hype and borrowed capital and, just people chasing that hype, right? So Someone says, it feels like a good time to reduce risk. I actually agree with that. I think it's a great time to reduce risk right now. This is a fantastic time to cash in some chips and put some insurance in place on your portfolios. There's lots of ways you can protect your real estate portfolio and your stock portfolio using hedges. And I think that this is a good time to do. Someone says, you don't fix shit. It's a feature of a fiat currency system. That's true too. What's interesting is that like even a Bitcoin solution isn't necessarily the solution we need. The problem is cultural. Like 50-something% of people are just retarded. That's the wrong word to use. Uneducated, culturally lazy, make big mistakes. If you gave them a custodian over their own net worth, I guarantee you they'd blow all the Bitcoin they had. It wouldn't solve the issue. If we just started using Bitcoin as our currency, it wouldn't solve any issue in terms of like the divide between the rich and the poor. It's a cultural issue. And though I like Bitcoin as an asset class for a small percentage of my net worth, I could never do business in Bitcoin because it's too volatile. You need the stability. And, there's a number of reasons why it wouldn't, I don't think, work to be completely on a Bitcoin system. And the government, again, will find a way to control things with or without a fiat currency. But I think a fiat currency would continue to exist. And I think that there'll probably be more than likely, there'll be a Bitcoin equivalent that will emerge that will not be a first mover, but will get widespread adoption because governments back it, because it's a stable coin. Like, I guess there already are stable coins, but some sort of government-backed central bank digital currency would make a lot of sense, especially one that couldn't be printed. That would be kind of cool. Chunk says Apple no longer innovates. Apple does innovate to an extent, and their partnership with OpenAI allows them to sell a ton more iPhones. So in that way, they're bringing AI into the iPhone, which makes it more accessible for people to use ChatGPT, et cetera, on the iPhone. And so in that way, they are innovating, but they have a stranglehold in what they do. And I wouldn't even really call them that much of a growth company, really. They're more stable, but apparently they're going to grow a ton from this. So we'll see. I think the growth estimates are a little bit rosy. The picture's a little too rosy. If you use real estate as a way to generate active income, would it make sense to invest your stock portfolio into blue chip stocks, your passive portfolio, then it's better than bonds? Yeah, I mean, that would make logical sense for sure. That was the intention when I created a dividend portfolio. I started trading options on dividend stocks, and then I lost my way. In 2023, I lost my way. Andrew says, have you looked into REITs? Any good REITs you recommend? Sure, I've spent a ton of time looking into REITs. I just, in this environment, I'd much rather be in a debt position than an equity position. And the REITs, you're in an equity position. So where rates are right now, you can get a 10% return in the debt position, in a first secured mortgage position. With a REIT, the way it works is like they'll have a first secured mortgage on there, maybe even a second secured mezzanine type financing and bridge financing. And then the equity holders in the REIT or the unit holders come last on the property. And if the market has a dip or something happens, the first and second mortgage balances will grow and they'll take the property. They have a very low chance of losing money. If you lend on a first mortgage, 70% loan to value, your chance of losing money is very, very low. In terms of the equity holder, you might be the last 10% in the property. And so if anything happens at all, where the interest grows at the first and second, you're wiped out immediately. So the REIT, the person in the equity position in a REIT, they're taking a lot of risk. I would much rather be in control of my own real estate portfolio. So for me, I'd rather be owning my own property and in control of my own property. Are there any private lending companies you recommend where we can double-digit returns? I source all my stuff privately. I'll throw you one. Okay, so I have a couple of flips right now that I'm doing. If anyone is watching this and wants to make a 10% rate of return, I will first secure 70% loan to value on a few of my properties that I own in cash right now. I have no mortgages on them. It's been a pain in my ass to deal with the bank. I should, if I had the time right now, I would go sit with the bank, go get qualified, get an appraisal, get a mortgage, and I get it at like 5. They have like 5.19, 4.99 mortgage promotions right now. I will pay 10% for a year because that 5% difference on a 150K mortgage on these small duplexes and stuff that I have that are worth maybe 250, 300 grand. That extra 5% is going to cost me $7,000 for the year. The time it'll take me to get a new mortgage that's not a private mortgage, like a bank mortgage, would be probably 20 hours. So that means it's $500 an hour for the first year. So if I'm flipping that property and I end up selling it for 300 later and my profit's 100 grand, if I have to pay $7,000 to a mortgage holder for a year, that's 7% of my entire profit. I don't care. And then that's a win for the mortgage holder, for you guys who want to invest in that. If you want to go to the lawyer, you get an independent lawyer, register a first secured mortgage at a safe loan to value. There'll be no further financing after you. I'll personally guarantee it. Sure, hit me up. I have some opportunities in my fund where I can make 10%. I might at some point make like a REIT of sorts where I secure folks in some sort of fund. I don't have the licenses to do that, and it's expensive. And the memorandums and things to set up a fund are expensive. So I don't know if I'll do this, but an idea would be to secure them against like build a portfolio of a couple hundred units, which I'm getting close to doing anyway right now. We've acquired 100 units almost in the last, getting close to 100 units in the last year. Not a small amount, but anyway, if I took the took the equity in those properties, my thought was this: like, let's say I had $10 million to invest in real estate. I buy $10 million in real estate. I buy all cash offers and all the properties just so I can close quick and negotiate good deals. I buy $10 million in property. I renovate the property. For the most part, I'm buying at 50 cents on the dollar. I got to spend 20 cents on the dollar. So I'm going to have to spend $2 or $3 million to renovate them on a $10 million portfolio. That'd be 13 million cost base. Then the properties are worth 20. And I go back to the bank and I put a 15 million in financing on it. So I pull out 15 million in cash from the $20 million portfolio that I bought for 10 million plus cost of renovations. Take that new 15 million I pulled out, buy 15 million more in properties, renovate, or I guess 12 million in properties, spend 3 million on renovations. Take that pool of properties I just bought, get them reappraised again at the new value, get them rented. All the while, these properties that I'm going to buy are going to be cash flow positive, right? And so it's pretty easy to build up a good sized fund where then the exit is like you get rid of all that private money and you put on like a stabilized bank financing, right? But it allows you to move quick, get good deals. So anyone wants to hit me up, make a 10% return. I'm open to that. That can make sense in some situations. I don't have a ton of opportunity. If you came with me like $3 million or $2 million, I couldn't put all that to work right now. But if you had a few $100,000, I could put that to work on some of the flips we're doing that I have my cash in. So I could pull that out and then I could buy more properties. So that can make sense. The leverage makes sense only on, it does not make sense on options contracts or stock portfolios. It's too dangerous, especially right now. Do not leverage up stock portfolios right now. But I would say it's safe to lever up against real estate at a safe loan to value, where the properties are cash flow positive, where they're generating good. And how do you define that? So for me, it's like the 1% rule. So the property has to be generating at least 1.5%, ideally 1.5% of the value of the property in gross income. So if a property is bringing in $2,000 a month in rent, the property is worth $199,000 approximately to me. It's what I want to get it at. If it's bringing in $3,000 a month in rent, again, about $300,000. Now in Toronto, you're going to be like $1 million for $3,000 in rent, which again, I would never buy properties there because they can't be levered properly and generate a return. And real estate is only attractive to me really when I can apply leverage to it. So if the property can't sustain a 10% debt, I don't want the property. I look like a rock star with those hair. Yeah, it's just a little bit of oils. I've been experiencing, now that I'm in my 30s, I'm 31, so I'll be 32 this year. And I'm starting to experience a little bit of hair loss. Not a ton, but like, actually, I have no hair loss here. It's just right here that I'm noticing a little bit. I've always had like a widow's peak. That's just like the way my hairstyle is. But I started getting this oil, this new, I was looking at these pills too, finasteride. I'm not going to take it because the side effects apparently are there. Some people are saying like a bit of brain fog. Whenever you mess with male hormones, you're going to have issues. Like, you can't expect to stop, I guess, the receptors that work with DHT and expect that not to have some slight performance issues. So that's the downside. There is a cure for balding. You just take finasteride and Propecia and I guess Rogaine or whatever, put all that on. You could do that. I don't want to do that. I'm like more of a naturalist. So I'm using these like biotin, rosemary oil. And so what you see in here is the oils that I've massaged into my hair just to give it like help that with the scalp to try to like prevent balding. And if you get on it early enough, I mean, my grandpa's full on bald. So I got to fight the genetics. And so far I've been okay. I mean, I got friends who are full bald. So I'm lucky so far, but that's what that's about. Next question was, hi Mike, I've heard you talking about buying property in Sarnia. Never heard you mention Windsor. Again, like you're talking about the differences between those cities. I don't like Windsor. I like Sarnia. I grew up in Sarnia. I know Sarnia. I don't like Windsor in general. I had a friend who went to school there, got stabbed at a bar. It's a rough city. It's far too. Like I get to Sarnia in 40 minutes from my house. I'm a 40-minute drive from my house. So logistically, it's very close. I have a lot of friends there. My brother lives in Sarnia and he runs all of our operations. So I have family connections that make my business. Whenever you invest in any business or anything you invest in, you want to have what's called alpha. Alpha is an edge. In the stock world, it's like having insider information, having some sort of edge on other people. I have no alpha in the stock market at all. I try to develop an alpha by like taking as much information as I can, developing informed opinions, but most of us have no alpha. In real estate, I can call Granny and buy her house for less than its appraised value, less than it's worth, because I can smoosh her, talk to her, build a connection. We can agree on a price. Maybe I'm solving problems for her. Maybe her house is full of shit. And she's like, I don't want to move it. I'm like, look, I'll hire movers. I'll move it for you. You don't have a place to go to rent. I'll drive you around, or I'll hire someone to drive you around and show you apartments. That might be worth $50,000 to her. If she owns the house in cash, she doesn't care about the difference between getting $50,000 more for the house if it's a nice, smooth experience for her. In real estate, there's arbitrage. So one, I have the arbitrage advantage of, and then I have the geographical proximity advantage of it being close to me, because you need to see, touch, and feel real estate for you to be able to have a competitive advantage, I think. And then there's also like cost control. If you hired expensive general contractors and expensive property managers, you'd make no money in real estate. All the good real estate operators, in-house property management. They hire their own staff that manage the rental properties, and they hire their own construction guys at hourly, reasonable rates, or they find really cheap sub-trade general contract, like not general contractors, but sub-trades that they bring in to solve each issue. And in doing that, you have a real estate business that you can generate alpha. So that's what I look for, is generate a return that's above and beyond what the market is able to do. Do you contribute to RESPs? I do. I don't know if I did this year, but I do almost every year. We will do it this year too for the kids. Yeah, it's free money. The government chips in like 20% and matches the registered education savings plans for your kids. So I think it's 20%. It's free money. So definitely do that. Grind to Greatness says, hey, Mike, what are your thoughts on where the market goes with a conservative government at the helm? I would be extremely bullish in a conservative government at the helm. There's been two policies that Trudeau's ever put out, that his government's ever put out, that I've liked. And one of them just came out. Federally, they're going to push every house, every plot, 4 units. You're going to be allowed to convert this is going to trickle down to being any property becoming a 4-plex legal. You have an unlegal 4-plex. They're going to let you make it legal without zoning approval. Automatically, any property up to 4 units. They're going to let you build 4 units. You're going to have to build 3 units, build 2 units, whatever you want. It used to be you could build 1 house, and it sucked. Now they're doing that. It's a very conservative policy. They're doing it because we have a housing crisis. And rates are so high right now, and the economy is so shit that developers and builders can't afford to build profitably right now. There's a lot of red tape and costs municipally for all this. So it's just, I don't know how to put it, but it's it's a good policy, to say the least. So would conservative government be bullish? Yes, 100%. Business owners love a conservative government. He will win. Justin Trudeau will lose. So that's my thought. I think something like 70% of the poll, 70% of Canadians right now wouldn't vote for him. So yeah, I guess he's in the minority who would consider voting for him. Boom, boom. People are doing some comments. Thank you for the comments. Just wanted to thank you. A year ago, I was asked about investing in Toronto. You said, why? Just move. And now I'm close to St. Catharines and house hacking. Thanks for that. Hey, no problem. Happy to help. You know, Toronto's a great city in some ways and has some great things about it. The fundamentals of the economy there in terms of real estate don't make a lot of sense. I don't know how people can afford, like I guess I could afford, but like people getting started who are average people, how could they afford to be in Toronto? Like you'd have to already be rich or have rich family to afford to live there. Yeah. Jamal says, I'd rather do a dividend instead of private lending. Again, totally viable. Dividend portfolios are cool in that you can, dividend portfolios are cool because you can collect a nice amount of dividends tax-free. You can collect like $100,000 a person a year tax-free, which is kind of cool. So, How does this play out with commercial loans close to blowing up in the US? Again, like a major risk factor, I think. There are tons of major risk factors. I could list a whole bunch of negative catalysts that could blow the market up at any time. But instead, the NASDAQ is ripping through all-time highs, setting records as we speak right now in the after hours. Things sometimes get irrational before they eventually correct to reality. James says, any cut exposure to mining stocks? Nice call on the rate cut, by the way. Yeah, so I thought we'd get a rate cut by Labor Day guaranteed, and I called that earlier this year. I'm just glad that we saw this one. I think we're going to another one this year before Labor Day, at least one. I hope for two. I think in Canada, we'll have 3 or 4 cuts by the end of the year. The US is in a different situation. I missed this earlier. So today at the FOMC meeting, the most critical piece of information, I think, in the entire meeting was when Jerome Powell was asked his first question in the Q&A. It was by a great reporter. He said, your current forecast is inflation at the end of the year at 2.8%. Do you stand by that? And he's like, yeah. It's currently at 2.7. So are you saying that inflation is going to increase between now and the end of the year in the United States? And he says, well, we're actually lapping a really bad reading in the first few months of 2024, blah, 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 and a really good reading in the start of 2023, or end of 2023, blah, 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 and it's his excuse. But it's a fact. Inflation isn't moving down meaningfully anymore, meaning policy isn't restrictive enough, meaning rates aren't high enough to bring inflation to target of 2%. It's been higher for longer. Higher for longer in the US is playing out. Why is the market rallying to all-time highs when we're in higher for longer? And it played out exactly as I said it would in 2022. I expected the market, when they were wrong, when Jerome was wrong, I expected the market to correct. And it didn't. It just kept going higher. He's wrong, up. He's right, up. No matter what, stock market, straight up to the fucking moon. What kind of simulation do we live in? There is no wrong answer. Everything is right, no matter what. I don't know. To go back to the summation, I think it's very interesting that the Fed is expecting no progress on inflation between now and the end of the year. They're just hoping that there's lagged effects and then inflation kind of comes down on its own. We're one geopolitical match strike away from, the Tinder blowing up. There's so many, a banking crisis. They said banks were strong today. That was like, wait, banks are strong? That's not the balance sheets I'm looking at. Banks are suffering. He's like, banks are very strong right now. Everything's great. It's like, are we reading the same script? Are we in the same world? But I guess everything's fine. And not beating inflation meaningfully from January 2024 annual read to December 2024 annual read, almost basically a full year, to not make any progress on inflation and still be at 2.8%, which, by the way, is almost 40% above their target for 2024. They're supposed to be at 2% handle, 2% clean, 2.0 by 2024 was their original forecast. Now we're in 2025, and they're still not going to have inflation at 2.0. And so it's like, how do we correct for the fact that inflation's running at 30 or 40% higher run rate than it's supposed to? Do we have some deflationary times? And like, we almost need deflation for the average person, but deflation destroys an economy. If you have deflation, you're fucked. Like, everything just is fucked trying to do business. The world like implodes. I can't even go into the details on that, but basically the world implodes. Investors just lose their mind. People just, it just is not good. Capital markets, it's terrible. And it incentivizes all the wrong things. But it's what we actually need for the average person. Or we just let the dollar become shit. And I guess that's their plan. Just print their way out of it. And, it's like an election year. So too bad. 1% rule. I have no exposure to mining stocks right now. No, I have a small exposure to Mara and Riot. A very small exposure. But again, I'm not very bullish on the mining stocks. Getting a 1% rule all day in St. John. There you go. Nice. 10% interest on a private loan is a decent offer, but BCE is offering 8.5% right now. People who want to lend a first position loan, but they'd be looking for a 15%. So the thing is this, right? Like, there are 8% options right now in the bond market. It's true. You've got some decent municipal bonds too. They're paying 6-7% right now, but that's a higher risk, in my opinion. Corporate debt is a higher risk than against, like, in real estate right now is down 30%. So how much further can it go? Maybe 5% at best. So the max drawdown, I think, for real estate before government steps in is like we're pretty close to that level right now. So if you're lending 70% on that or 65% on that depressed value, your chance of loss is zero. I would call it a risk-free return. If you're lending to someone who has decent credit, decent net worth, and you're lending against a property at 65, 70% loan to value, I would call that a risk-free return. So you get a risk-free 10%. There is no risk-free 15. You won't find risk-free 65% loan to value at 15. I mean, maybe you might find some of that, but not a lot of it. Not from well-qualified borrowers. You will from shitty qualified borrowers. But again, there's some slight risk with that as well. So it's interesting the point you make though about these bonds paying 8.5%. I don't think they're paying 8.5% right now. I think that BC is probably paying 7.5% now with rates trending down. We'll see that disappear. And so the next year, that 10% offer will become very attractive. Maybe not as attractive as it is right now. You're getting 20% more than you're getting with Bell Canada. But I think there's risk with those bonds. I have to look into it. I don't have, I haven't looked into the quality of them, of what those notes look like. But yeah, I know the telcos are struggling. All the dividend stocks right now are struggling. So yeah, it's a tough beast right now out there in the Canadian market. 2% rule. There you go. Yeah, still probably can find 2% rule if you look hard enough. Boom, boom. Any advice for solopreneurs broadly? Elevate from being a solopreneur to a proper entrepreneur with a team. That's what I recommend. It's save. A lot of entrepreneurs and solopreneurs that I meet have terrible spending habits. So save for the future. Someone says, I went back to watch old videos. How has the Rosehart snowball changed? Meaningfully in no major way, other than rents have doubled over the period since I made that video, probably, maybe more than doubled. And house prices have probably 2.5 times. So the price to rent ratio is slightly in favor of the old method. It was easier to do it then than it is to do it now. But I mean, the numbers, like the percentages all still work the same way, right? So it's just your cash flow's a little tighter, but the burring is totally the same now versus, you were buying a $300,000 house there before and refinancing it at $400,000. Now it would be a $400,000 house going to 500, or whatever, maybe 500 going to 650 or something. The numbers are bigger, but that's because the value, probably inflation adjusted, not that much bigger. Real estate's been getting its ass kicked if you adjust in real terms. Like inflation on real estate has been brutal. Like inflation has just destroyed the dollar buying power of real estate, and real estate's not appreciating right now, it's depreciating. So it's like the dollar is losing power at the same time as the real estate is like depressed. So it's like double whammy, like the real return of real estate is super negative right now if you adjust for inflation. Like we're down like 45% if you adjust for inflation, almost half if you look at buying power. That's finally ending, and it seems like the inflation war is kind of being handled now. We're getting in the 2 handles, which is not that bad. Yeah. Is primary residence best way to build wealth in Canada? There isn't really a primary residence flip. There's like, if you own primary residences your whole life, and you trade them too. So every like 2, 3, 4, 5 years, you upgrade to another residence, or you move and you buy something else because you want to move or whatever. The CRA doesn't like when you flip your primary residence, so don't do that. Especially don't do it every year. Do it maybe every few years. You want to stay in a house for 3, 4 years. They don't want to be like, if you just live in a house for 1 year, there's a lot of risk. You'd be audited, I've heard. I never did the 1 year thing. I've always been several years at all my primary residences. I live in them, they're my home. But is it an amazing vehicle? Hell yeah. You could buy a house 15 years ago and it'd be worth 150 grand, you improve it, whatever. Now it's worth 600 grand and you made $450,000 tax-free. In Canada, it's uncapped. You can buy a house for $1 million, and if it's worth $10 million when you go to retire, you get a $9 million capital gain tax-free in Canada. The primary residence tax-free exemption is the most overpowered tax loophole that exists, because the Canadian government incentivizes homeownership. It wants that for Canadians. And so unlike the US, where they cap it at $250,000 in capital gain, in Canada, they reward the wealthy. And that's why in Toronto and Vancouver, houses have ballooned to $3, $4, $5 million, $6 million, $7 million, is because it's one of our primary tax-free savings vehicles in Canada is investing in our homes. And so real estate is a large portion of the Canadian economy, of the Ontario economy, because the way our tax system is set up and the way that our economy is set up, to be honest. So real estate's huge in Ontario and in Canada. Boom. Yeah, I mean, the ratios are the same, but the numbers all just inflation adjusted much, much bigger because that video is probably 9 years old now. Crazy. That video, I probably filmed that video in 2016, maybe released it in 2017. That must have been 2024, so almost 8 years ago. Crazy. Anyway, guys, my phone's going to die and I'm at the last of the questions. So it's been a long hour and I've really enjoyed it with you guys. And thank you for tuning in. Everyone watching the replay, hit the little thumbs up button, jump in the comments, share the videos around. It means a lot that people tune in and actually watch the video and care. Thank you, everyone. Someone else says good insights. Keep up the grind. Hard times are only there to make good times feel sweeter. That's true. Anyone who's ever been really, really sick before, think about just after you got better from being sick. How the water tastes so fresh and sweet. The air is so nice. You go outside in the sun, you're like, wow, life is just so good. So I love when I go through shit periods of time because I know afterwards it'll be, afterwards it'll be just so much sweeter. So this tough times I'm in right now are going to make life so much better later on in the year. So thank you, everyone. We'll still be here either way, or hair either way you put in there. That's funny. Nice little pun there. James says, thanks, Mike. Better stream than Roaring Kitties. Okay, I got to address GameStop for a second here. Crazy. Roaring Kitty almost had $1 billion in GameStop options and shares. Crazy ability to influence the market on a garbage company, trash company. Really smart management at GameStop, though. I got to give them credit. They've been raising money at the peaks. They've been doing share offerings and raising capital from the stupid retail investors who don't mind buying at the top and holding their shares at the top. They've been selling to them and raising billions in cash. So GameStop's actually saved itself from bankruptcy because of Roaring Kitty and all of the retail investors who are YOLOing into the stock with lottery tickets. Every share they buy being a lottery ticket, thinking they're going to be able to sell to someone else for more later. That's the whole concept behind it. They might go under the guise of sticking it to the shorts or whatever, but really they're gambling and they're hoping to sell their shares to someone else at the top who's maybe stupider than them. And that may or may not happen. There's a greater chance of probably losing your money because, again, you're buying shares in a company with no earnings, no meaningful anything other than contracting their business. The retail business is shrinking. Now, we'll see what they can do with that few $1 billion they just raised. It gave them a new floor. If they're worth $2 a share, maybe now they're worth $5 to $10 a share because of that cash they've raised from their crazy investor base of loyal soldiers willing to send their paychecks off to die. And raise capital for GameStop. It's almost like they're selling shares more than they probably raise more from selling shares to bag holders than they do from selling any products or games to anyone. Funny concept, but anyway, I've been shorting GameStop since the top here, full disclosure. I've also longed it at a few different points where I had a couple hundred shares just for fun, just because it's been fun to watch. Roaring Kitty has such a power to move markets, it's just wild. And so that's been fun to watch from the sidelines for the most part. No meaningful amount has been invested on my part. I think I made maybe $1,000 so far, just doing a little bit of shorting. But anyway, we'll see what happens. June 21st, his options contracts expire. He probably unloaded some today. I'm sure that he's unloading some. He was really good in 2021 at dumping his bag on his followers before. And so we'll see if he does that again this time. All right, everyone. Talk to you guys later. Have a good night. Remember, the secret to unlocking a wealthier you is to spend less, earn more, and maximize returns in the difference. Those are the 3 levers to creating and building wealth and to having the best life that you can have, really, at the end of the day. All right, how do I end this stream? I gotta figure out how to end this. Oh, there's a new menu right here, X, there we go. Good night, guys.